Welcome to the Kentucky Bankers Association's Vendor Viewpoint podcast. I'm Nina Goddess, Head of Sponsorship Sales and Convention Coordinator here at the KBA. Each episode, we sit down and get personal with one of our trusted vendors. In this episode, Chuck Maggard, President and CEO of Ken Bank Insurance Services, sits down with Lon Haynes and Lou Moore, Managing Principals with Bank Consulting Partners. They will also be joined by special guest David Bowling, CEO of Citizens Union Bank. We invite you to sit back, relax, and enjoy this enlightening discussion. Take it away, Chuck.
Hello, I'm Chuck Maggard, President and CEO of Ken Bank Insurance Services, the insurance subsidiary of the Kentucky Bankers Association. I'm happy to have with me today Lou Moore and Lon Haynes from Bank Consulting Partners, and Dave Bowling, former Chairman Bowling of the KBA, and the current CEO of Citizens Union Bank in Shelbyville, Kentucky. Lou, Lon, thanks again for coming on. Tell me a little bit about your firm and what services do you offer?
Thanks, Chuck. This is Lon Haynes. So we support banks with the evaluation, implementation, and administration of bank-owned life insurance and non-qualified deferred compensation.
Great. I'm happy to say that Bank Consulting Partners has been a key partner of the KBA since it was founded. They're a partner that does a lot of work with our banks here in Kentucky. They do an excellent job. They come extremely well vetted. But the reason we're talking about this BOLI today is BOLI seems to be even more popular today than it was. Lou, Lon, can you tell me what's changed, why today banks that were not looking at BOLI before are starting to look at BOLI now?
Sure, Chuck. The market today is challenging to say the least, and really the emphasis and focus for banks on BOLI is a function of the liquidity that's flooded the market as a result of PPP and the federal stimulus. That's resulted in a reduction in loan to deposit ratios, an increase in liquidity, and substantially more holdings in cash for community banks across the country. In Kentucky alone, the cash position has doubled over the past 5 quarters. And therefore, banks really need to emphasize and evaluate alternative assets that maybe they had opted to forego evaluating in the past.
Okay, so basically, I guess what you're saying is banks have got a lot more liquidity now, more cash to invest, some options that may have been more attractive in the past. Obviously, the banks would like loans, but loan demand's a little soft. I guess the securities market's not the best place. So BOLI is just another opportunity for a bank to invest their money. Is that right?
Yeah, absolutely, Chuck. So BOLI has always been purchased, or at least intended to be purchased as an alternative to securities. Obviously, banks are going to lend money when they have the demand. If they can't fill their liquidity need with lending, they purchase securities, and BOLI offers a viable alternative to a typical taxable security for 2 particular reasons. Number one, it's a tax-advantaged asset, and number 2, it's a creditworthy asset. In today's marketplace, given the lack of loan demand in many locales, in tandem with the real absence of any yield from a security standpoint, BOLI offers a real viable solution to fill at least some of that liquidity need. Now, typically BOLI represents 1 to 3% of a bank's assets, so it's not an absolute solution to fill the need of all that excess liquidity. But given the rates that are being credited by the core carriers in the BOLI space, and again in tandem with the credit of those issuers, BOLI offers banks the opportunity to pick up anywhere from 125 to 200 basis points on a net after-tax basis relative to the securities that are available for purchase.
Well, with that big of a difference, that's substantial. How come it seems, to me, it seems that when I look at call reports of banks, it seems that banks either have all the BOLI that they can buy by law, or they don't have any. There's really not a whole lot of in between. Why do you see either complete buy-in or very little or minimal buy-in by community banks?
Hey Chuck, this is Lou Moore. I can address that. It's a real good question. I'll preface by saying BOLI is not new. This is a mature asset that has been around since the early 1980s. And when you look at the national BOLI holdings, and you mentioned the call report, and all this information is public as far as BOLI holdings, because it's recorded as another asset under Schedule RCF. So when you pull, national BOLI holding information from call reports, you'll see that, globally, when you look at community banks of all different sizes across the country, you've got, nearly 70% of all banks nationwide own BOLI. That's a pretty large number. When compared, you do have some states that we would consider are laggards, or the prevalence just isn't as high. Kentucky would be one of those states where you look at globally in the state of Kentucky, there's realistically about 60% of the banks that have BOLI. That however, increased rather substantially, primarily based upon the comments that Lon made earlier, the amount of liquidity. We've seen a tremendous demand in Kentucky, where there was nearly 75 million of new BOLI placed on bank balance sheets between Q1 2020 and Q1 2021. So I think you're seeing the demand will continue for those that don't have BOLI as they continue to be educated on the balance sheet and income statement benefits of the asset.
Awesome. In your all's dealings with our banks here in Kentucky, are there any common misconceptions that banks may have that might be a factor in them not having BOLI?
Yeah, of course. I think, Chuck, the biggest misconception of BOLI is attributable to the fact that it's life insurance. And the fact of the matter is, most, if not all, bankers own life insurance. And they own life insurance for different reasons than why a bank would purchase bank-owned life insurance. So any banker would purchase retail life insurance, what we consider to be personal life insurance coverage for income protection. BOLI is not purchased for the death benefit. If banks are purchasing BOLI for the death benefit, then we'd be inclined to think they're purchasing it for the wrong reasons. BOLI is purchased as an earning asset. But again, given the fact that it is life insurance, there's the misconception of, why would I purchase life insurance as an investment? The misconception that the bank will profit off of the death of an insured individual. The reality is, BOLI is structured entirely different than a typical life insurance product. It's institutionally priced, it's institutionally placed, and it's structured to minimize the death benefit, so that in the event of death, the claim proceeds really are a return of the original premium, the tax-deferred income, plus the cost of insurance charges that have been recorded to date. So again, the life insurance perception or misperception is quite prevalent. And that's really quite understandable given the fact that this is life insurance. But again, it's a very unique life insurance product that, quite frankly, requires education, time, and consultation.
So, I got my start in the life insurance business, actually. And the life insurance contracts that I used to sell, particularly the permanent ones, you'd have a cash value, but there'd be a huge surrender charge. Is that how BOLI works as well, or is it a little different?
Yeah, hey Chuck, this is Lou. With BOLI, it's institutionally priced, institutionally placed. So your comments about surrender charges, it's a different type of asset. Thus the acronym, BOLI, bank-owned life insurance. This is only structured and designed by the insurance carriers for banks. From day one, a bank will start recording earnings immediately as tax-free other non-interest income. So there are no surrender charges on the front side. On the back side, it's immediately accretive to earnings day one. So I think that your point about and Lon's point about misconceptions of life insurance is certainly an education that we continue to have in discussions with bank boards. So you bring up some real good points.
So I guess the product that you all use to fund the BOLI is not the same product that the banker's brother-in-law sells.
That's correct. Yeah, we certainly have a lot of even insurance agents that are directors on bank boards that just quite frankly have heard of the asset. They're insurance agents, but sometimes it's an education curve for some of those agents on those bank boards to get a better understanding of how the product works versus a traditional retail type of product that the agent on the board might be selling to some of his clients.
Got it. Well, that leads to my next question is we were in a meeting just the other day with the bank CEO, had a great meeting talking about BOLI. He grasped it greatly. It's something he wanted to do, but he thought that he might struggle with board buy-in. Is there something that you two guys can do and your firm can do to help get that board buy-in?
Yes, Chuck, this is Lon again. The most important part of the education process is really taking the time to understand the asset. And the reality is, in about every situation, the executive team has more exposure to this asset, whereas the board might discuss the asset at a couple of board meetings and then be in a position where they need to make a decision to purchase the asset or forgo purchasing the asset. In our experience, the best way to approach educating the board is to take time. Take time in person. These days, take time over video conference calls and help them really and truly understand this unique insurance asset so that they can make an informed decision. And that informed decision might be to purchase BOLI. That informed decision might be to forego purchasing BOLI. But regardless of the decision, the outcome is based upon real facts and real exposure to this asset. So again, like anything else, and particularly given the uniqueness of this asset, boards need to take some time to understand the asset so that they can be in a position to decide whether it makes sense for their institution. Great.
Well, Dave, we've not forgotten about you. We've got Dave Bowling here, CEO of Citizens Union Bank. Dave's bank is a client of Bank Consulting Partners, and I'm going to turn it over to Lou and Lon and Dave and let them talk a little bit about how their relationship started, what Bank Consulting Partners was able to do for Citizens Union Bank, the impact that it's had. So I'm going to throw it over to you guys.
Hey Chuck, this is David. Yeah, so our bank's actually had BOLI on a pretty limited scale for many years, but we used it really as a key man structure and a supplemental executive life insurance structure for a few key folks in our bank, we had never used BOLI as an investment vehicle. And for the most part, we fit exactly the profile that Lon described earlier. We've always had really strong loan demand, and we used most of our liquidity to fund loans and buy traditional investments. But as we all know, the world changed a little over a year ago, and for a lot of reasons that Lon described earlier and Lou talked about, we, like most every other bank, got flooded with deposits. And so we had a lot of excess liquidity. And so we were well aware that many banks had used BOLI as an investment vehicle, but we never had. And quite frankly, had never explored it very deeply because we just never had the need. So we knew these guys from working with the KBA and that type of thing. So we reached out to them and said, hey, we really do want to learn a lot more about BOLI as an investment vehicle. And so they did a nice job of working with us to sort of walk us through the ins and outs of how this really works. As I said, our board was pretty familiar with it because we had used it for different purposes in the past, but we were also able to educate them through this process and what this would look like. And for us, it was an easy decision because the yield that we could get from this investment vehicle compared to what we could find elsewhere, it just wasn't very comparable. And we liked the risk profile of that. So again, these guys were great in that they had all of the details, all of the information, and had so much experience doing this. It just made a lot of sense for us to go down that path. One thing that was particularly important to us, which I think is one of the real values that we got from working with Lon and Lou and their firm, is, we're like everybody else. We worry a lot about what are the regulators going to think, and are we checking all the boxes? And these guys were able to give us, for lack of a better word, a turnkey approach to not only the investment and the financial side of the equation, and being able to explain it to our board, but also the policies and the procedures and everything associated with that, the annual reviews, all of that type of information, they bring to the table in a very almost prepackaged sort of way. And so they made the whole process easy. And, I'm sure most CEOs are like me, easy is important. So it's worked out to be a really good relationship, but, it's providing a great return to the bank, which is really what my job's all about.
Well, thank you, Dave. That you actually addressed one of the questions I was going to ask, is about compliance risk that goes along with BOLI. But as you said, that Bank Consulting Partners really made that easy for you, I guess.
Yeah, they really did. Our risk management people obviously got involved in all of that, but these guys have done it so many times and have dealt with the regulators in so many different banks. It just gave us a lot of comfort.
Super. Lou, Lon, anything you'd like to add or anything you'd like to ask David?
Sure, Chuck. This is Lon. Dave, just quick question. Any purchase decision, whether you're buying bank-owned life insurance or buying a car, it's a function of a need and a want. The market conditions these days are dictating a certain need factor to potentially diversify assets, to look at BOLI, to look at alternative assets. For you, what was the most compelling factor or factors that made BOLI a viable asset to purchase when you did? And was it more of a need given excess liquidity, or was it a combination of the need of the asset in tandem with wanting to purchase the asset given the particulars, the contractual terms of the asset, the tax advantage nature of the asset, and the credit of the asset?
Yeah, as you said, BOLI's different from sort of a traditional investment vehicle that many of us have bought, various different types over the years. so it takes a little bit to get to understand what that structure is and what the risk associated with that are. But at the end of the day, it had such a good return compared to what was available in the market to us in terms of traditional investments. And, there's just not a lot of options out there in the investment world that's going to give anywhere close to this return without taking substantial interest rate risk. And so we balanced all of those factors. BOLI was an easy decision in terms of what it brought to the bank for us. And as you said, it gives us some real diversity in our investment portfolio. So even though we record it as another asset in our call report, we just think of it just like another investment vehicle.
Hey, David, this is Lou. Another quick question for you. As you know, and your board knows, this is a regulatory approved asset under OCC 2004-56, and we were real instrumental working in tandem with your credit and compliance folks down at Cub, developing your policy statement, your pre-purchase, your post-purchase compliance, and obviously any necessary annual regulatory updates and credit modeling. I actually don't know this answer, so I'm going to ask it. Have you had an exam, or have the regulators been out to see the bank since your last BOLI purchase, and what questions, if any, did they have?
Yeah, actually, we haven't had an exam since that time. We have examiners coming later this month, so it's really just a function of the calendar that we haven't had an exam in that time frame. But as you know, we all take this stuff very seriously from a regulatory perspective. So having good current policies and procedures and making sure that we're doing the proper sort of review, both initially and annually, and getting that properly documented is a very important part of the overall equation. And so, what made a lot of sense to us was the level of experience you guys have had dealing with other banks and those banks dealing with regulators, but also the fact that you could provide policies and procedures and documentation that had been through the regulatory process many, many times. Again, that gave us a lot of comfort that when we do have an exam, that we're going to be in good stead as it relates to this issue.
Well, our time's about up. I want to thank everybody, Lou, Lon, Dave, for joining us on the podcast. I think we've had a very good, informative conversation about Banc Consulting Partners and BOLI. I'd like to say, if any of you out there that are listening to the podcast that have any questions, either about Banc Consulting Partners or BOLI or whatever insurance related, just give the KBA a call and ask for me. I'd be happy to take your call and see if we can help. But thank you all for joining us. Thank you for listening in.
Thanks, Chuck.
Thank you, Chuck.